Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 10th, 5:11 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a uptrend, hanging in there. Short-term caution certainly not going away after today's escapades in the market. You check the trend gauge in the upper right hand of your screen, market leaders, neutral. I might be being generous by keeping that at neutral. Short term, also neutral. All five of the indexes that you see there in yellow, the NASDAQ, the S&P 500, mid caps and small caps, all either got right to or above their 21-day moving average today on the morning gap up and go, and all four failed miserably. The Dow managed to hold the 21-day moving average, but short term, we're neutral with a big failure today. Big gap and crap is the technical term for it. Medium term, we're still showing bullish NASDAQ 100 holding on to the 50-day moving average. Long term, all five of those major indexes are above the 200-day moving average. So we've got a green arrow there. So what happened today? CPI came out and it was either in line or better than expectations. The market was already showing a green open according to the futures, and it spiked a little bit higher. Nice open, up 0.5% on the S&P, 70.75% on the NASDAQ 100, and it took off to the upside for exactly 30 minutes. Then at 10 o'clock, a brutal, harsh reversal and a 4-hour trend down, basically what you'd call an epic failure, losing the 21-day moving average and failing right at the 21 in the case of the NASDAQ 100, and falling down to about 2 o'clock, where we bounced, undercut yesterday's lows just by a few cents on the NASDAQ and the S&P, and we bounced there. That bounce was short-lived. We sold off again. Really, a really disappointing day if you're a bull. Here are the final numbers. 50-day moving average did hold, however, for all five of the indexes. RG8, this is our 8 growth ETF composite, down 0.25%. S&P up as much as 1.3%, and then down as much as 1/3%. Closing barely positive. NASDAQ 100 up 0.2%. Dow Jones Industrial Average up 0.15. Mid caps down about 0.2. Russell 2000 small caps down 0.4. Global 60/40 down 0.08%. Bonds, the big loser here, as interest rates shot back higher, especially after 1 o'clock, as bond auction at 1 p.m. results were announced and demand was extremely weak. We'll show the chart of the yields and you'll see exactly what we're talking about. And with that spike up in yields, that put the damper on any rally that we were attempting in the indexes. In-house GROTECTION down by 0.03%, up 1%, over 1% at one point. Again, miserable day for the bulls. Let's get right in to it. We'll start with the S&P index here. First of all, note that we're approaching oversold. So what we look for now is a hook back to the upside. The NASI, the McClellan Summation Index, also is pulling back, corresponding with the weakness that we're seeing in the indexes. You can see the move above the 21 and the 8 and the failure. Let's go to the 5-minute chart here. It's pretty obvious here. So here's your gap up, quickly exceeding yesterday's highs and the highs of the day before, rallying all the way up to 45.27, and then the abrupt halt and miserable selling, any attempt at a bounce failing. 1, 2, 3 legs down, undercut yesterday, yesterday's low 44.61, undercut it down to 44.58. Hey, where does that sound familiar from? I'll show you in a minute. Nice bounce up to 44.85-ish, and then rolling over at the close, still holding that 44.60 on the pullback. 44.58 That should sound familiar if you've been paying attention. I was 44.58. That's the highs of the before we broke out back on uh, June 30th, July 3rd, July 5th, and then the final breakout on the 12th, which is what we're testing right now. So you can see the lows of the day basically right in line with that 44.58 level. It's got to hold, plain and simple, or the next level down is 4,400, another percent lower, or a percent and a half based on the close at 44.68. So today's lows, we've been bouncing off this area for 3 days now, but continuing to make lower lows, starting with the third, then on the 4th, then on the 7th, 8th, and 9th. So 5 days of lower lows. That's just the definition of a downtrend. Also lower highs, referring back to the second. So uh, looking for any sort of a change in trend that we can get, but any bounce, the bears have been winning the day of the bounce, especially today. This was a definite disappointment for the Bulls. We didn't get sucked in to anything really. Nail we did buy, and we're down on that. But we'll talk about the portfolio changes when we get to the tail of the tape. So there's your S&P 500. Let's go next to the NASDAQ 100. Also, this is already in oversold territory. This came right up into the 21 and failed by a couple of pennies, but it did hold, made a lower low, but did hold the 50-day moving average. So if you're looking for a silver lining, it's very hard to see, but it's there if you look closely. Dow Jones Industrial Average continuing to be the leader on a relative strength basis for 1, 2, 3, 4, 4.5 weeks now. Best looking candle on the day, although, but that's saying that you're the cleanest dirty shirt. It did hold the 21-day moving average. Mid caps failed at the 8 and the 21, got above it, but like everything else, reversed lower. This is 3 closes below the 21 on mid caps now. IWM also failed at the 21 and made a lower low, so complete outside negative reversal and closed lower too. It's approaching over sold territory also. So we're looking for that oversold hookup. You can stay there for weeks, as you can witness by back here, 1, 2, 3 weeks below oversold. Here was a failed attempt, 2, 3, 4.5 weeks oversold. So just because you're oversold doesn't mean you can blindly start buying. We're not really seeing the action out of, except for a few, the action out of leading stocks that we want to see. We're certainly not seeing it. We're looking for it. We're looking for some entries today, but by the time we started rolling over, we just stepped back and waited for the smoke to clear, and it didn't clear until we got all the way down to the 50-day moving average and bounced. The VIX lower most of the day, but again, put in a wide range day and is still above the 50 and above the 21. We want to see that come back down below 15 where it was in the morning. And that's what you wanted to see, but again, failed along with the market failing. Next, let's look at the dollar. Big range on the dollar today. Let's go to a 5-minute chart on it. And gap down, and then strength came in, and it closed near the highs of the day. Note there was some strong reaction around 2 o'clock. Or around 1 o'clock. That'll become more apparent why when we start checking out the bonds. Let's go to the precious metals quickly. Just barely down on gold, but a negative reversal. Complete moving opposite direction of the dollar all day. GDX gold stocks slightly positive, but gave back some nice gains. SLV silver slightly positive, but also giving back the gains. Now let's flip to, well, we'll go to Bitcoin first. BITO basically flat. Now we'll flip to bonds. BND, ugly negative reversal. Let's go to a 5-minute chart here. This jumps out at you. This is 120, but the initial move down here, and it's more apparent on the TLT chart. On the week bond auction, this is the 5-minute bar. right after 1 o'clock, and then we just a waterfall lower, and rates are rising while this has happened, closing at the lows of the day for BND. Let's go to the TNX. We'll go to the 10-year first, and you can see the spike up there, and then the flag. Let's go to TLT. Terrible move down here. Big move down at that 105 bar. Waterfall bounce. Another move lower. TYX. This is the 30-year yield. So this is certainly a factor again as the bottom line. TYX, you can see the strong move up there. Let's take it back to the daily chart. Outside positive reversal, just the opposite of what's going on with stocks. This is certainly impacting what's going on with the market. So with that positive reversal and the breakout, we bought TBT, which goes up as yields go up. Bought it right really near the top. Wanted to see after it put this flag in, we wanted to see how it was pulling back, and then when it regained its strength, that's when we entered TBT today. And this does not bode well for the market, and yields certainly want to go higher. Of course, this could be the high of the day. We don't ever predict, but again, we start small. We look for confirmation and low risk entries if the trend continues. But that's not a good look for bonds, and certainly an ugly negative reversal for stocks. Let's flip to the tail of the tape now. VIX, fear and greed, not a big change. Okay, little bit of help for the bulls here on AAII, down 4 percentage points on the week. They put new stats out weekly, and the bears up 4 percentage points. Connor's going to break down this as well as the NAIIM survey, which is money managers, which it's like it'll be interesting. Check out the podcast tomorrow, and you'll see that. And Ted is going to do an overview on two stocks that begin with a V that are on the 21 over 21 list that we've been watching, and that is VRT, which we bought, and VICR, which we're watching. So the day count. Well, let's hit the news first. CPI in line, initial jobless claims were also above expectations. Both of these things point to the Fed pausing, and that's what the Fed futures are looking at right now. But then, as I said, yields spiked at that 1 p.m. bond auction. Tomorrow morning before the open, we've got PPI, the producer price index. Day count from down 2 to down 2 with a gap and fail. 7 days below the 80 MA. 3 days below the 21 EMA, short-term negative on our expectations until we can reclaim that 21. On the plus side today, also note the S&P ATR is increasing. That's bearish. We got down under 0.8, and that was about near where the market topped, and the ATR has been increasing ever since, and today's big range will take it up even further. On the plus side today, biotech and software stocks. On the downside, ITB. I mentioned we bought Nail. Semiconductors weak as more China limitation of exporting semiconductors to China. The administration kicked that around again, and XME was weak. So the portfolio in-house, we trimmed NRGU. This got 3 ATR above the 21 EMA. We like to sell into strength, hate giving profits back. We sold at around 490-ish. It did reverse after that. Still bullish. We still own, we took a 20% gain on it. The first buy that we have, we're up over 30% on it. This is volatile, due for a pullback. When you just get extended to the upside, we just like to lock some in because reversion to the mean is normally right around the corner. On the other hand, ITB, this started out really nicely on the day with a breakout and a move higher, and we bought Nail, and then we reversed lower as interest rates went higher, and we're underwater on this slightly. Today's lows of the day are probably our eject point, maybe a little bit more, because it should hold the 21 as it was doing. It was attempting to break out of this nice tight 4-week base that it's putting in, but that was a miserable failure. So we own Nail, small loss on that, back to the portfolio. So we trimmed NRGU, we bought Nail. We trimmed Nvidia, that at a 20% gain. This was our buy number 4, which was after hours, 20% gain. When we ticked back to a 20% gain, that was our stop level. So we still have the 3 buys that were made back while it was still ascending here before the last prior move up. But this has been under some pressure, and we'll just peel some off and lock in our gains. We can always buy it back. We may end up having to see what happens in 2 weeks when it does its earnings report. So still our biggest position, really our by far our biggest individual position. So trimmed Nvidia, bought Nail, and then real estate on the negative reversal on this. This is a bear flag. We got up to the 21 and it reversed. We bought DRV, which is an inverse XLRE. Normally, it's a good play on our rising interest rates, which are weak for real estate. And I mean, that's just as low risk an entry as you can get for DRV, looking at the XLRE negative reversal chart. And then I mentioned we bought the TBT. So those were the portfolio changes: trimming NRGU into strength. That's why it says O trim. Detrim into weakness, defensive selling on Nvidia. Bought Nail, DRV on the reversal on real estate, TBT on the breakout in interest rates. So that dropped our adjusted beta from 1.12 to 0.97. We want to stay right around that 1 threshold under normal circumstances, as long as we're above the 50-day moving average on the S&P and the NASDAQ 100, and those levels continue to hold. If they break, this will go decidedly lower, and then we'll look down to our 0.6 threshold, which is versus the 100-day moving average on the indexes. But the bottom line for the day: CPI gap and go fails badly, reverses below the 21 EMA, 50 SMA support holds, and we are certainly looking for that to continue to hold, or the market will deteriorate. So we'll look at a couple of charts now. Not a whole lot to look at outside of what we have already checked. We'll look at Nvidia again with 2 closes below the 50-day moving average. Need to see how that closes the week tomorrow. We definitely want to see some buyers come in to prop it up. Let's see, VRT, we're underwater on this. We bought this yesterday. We're down by a couple of percent on these starter positions on VRT and on Bros, as they were down today. 2 earnings gaps. Our stop should be pretty clear. Today's low, for the most part on both of them, which corresponds to the 200-day moving average on Bros. I showed what we bought. How about 2 that acted great today? APP AppLovin, earnings gap, 721% volume, 26.5%. Definitely a surprise for Wall Street. Note how it gapped the last earnings report too, and it held it nicely. A little bit of a wiggle in here. But for the most part, rode the 21 higher, pulled back to the 21 before earnings. The big percent moves on big volume get our attention to monitor them going forward. And speaking of which, AAOI had a big reaction to earnings last week. Second day follow-up, 2 tight inside days, and broke higher today, up 19.5% on above average volume. It's in the telecom fiber optics. This is related to data center networking, which is like the lone area of power that's surviving for tech stocks. A bunch of the AI software stocks have all fallen by the wayside. Nvidia has shown weakness, but data center build out continues to be pretty strong. SMCI, obviously an exception. I explained that yesterday, that it's basically due on Nvidia not being able to provide them the number of chips that they need to continue their installations, but AAOI having no such problems there. 2 other networking stocks that are still holding up well: ANET and EXTR, networking stocks, computer network stocks. That's the strength, data center build outs. And with that, I'm going to wrap it. Remember, it's not how much you make in the market, it's how much of that you can keep. We like taking advantage of the market when the wind is at our back, taking the gains that the market wants to give us, but we'll fight like hell to keep from giving that back by means of offensive selling, defensive selling, limiting our exposure depending on the health of the overall market. And we detail this 5 nights a week in our videos, plus a weekend podcast. Feel free to spread the word. I really appreciate all the comments and likes on YouTube. Keep it up. I do answer to every comment. And of course, if you want to email, I'm at don@revereasset.com. My partner, Dan Stewart, dan@revereasset.com. If you want to call, the phone is 855 Real Wealth. That's 855-732-5932. And with that, I'm going to wrap up the video for Thursday, August 10th. This is Don Vandenbord with Revere Asset Management. Just the facts here at Revere, telling it like it is. It's not always what you want to hear, but it's what you need to hear about what's going on in the market. Thanks for listening and have a great day.